Hello, this is Matt on the Moon Lambo channel. A very popular on-chain analyst has provided some evidence that retail speculators are buying the crypto dip, believe it or not. Now, I've been reporting recently, and this part shouldn't be surprising to anybody, but institutional money has been flowing in as the market has been working towards the bottom. Some think we already hit the bottom, some think it's going to go a little bit lower. Either way, this is a time where institutions have been effectively dollar cost averaging in. It's just neat to see. In addition to that, there's serious signs that even retail speculators, in particular over the last week or so, they've been jumping in finally as well. So maybe we already had the bottom, maybe we didn't, but even if we didn't, probably pretty close if retail speculators are jumping back in. Now, however, a separate analyst is also warning that altcoins like XRP may suffer more in the short term as Bitcoin's market dominance increases. And that's not something to be necessarily afraid of, and there will be people out there that see that as an opportunity if altcoin prices dip as Bitcoin takes off, but we have seen that a number of times when rallies get going and it's really a Bitcoin-focused rally. Altcoins take a hit in the short term, but eventually, since the whole market moves in tandem, altcoins do catch out. It's just how things cycle. So money flows into Bitcoin first, then it'll cycle through to large cap coins, then mid cap coins, then small cap coins, and then at that point, the money, a lot of times, actually just exits crypto. People take profits. Some of it will go back to Bitcoin. It's just the way of things. So anyway, I want to share with you a number of opinions from various individuals. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. Market's looking a little bit red today. We've seen worse recently, though, I can tell you that. XRP's down to 41 cents. Bitcoin's at $29,171. And actually, it got as low as $28,794 within the last 24 hours. Market cap for the asset class down to 1.26 trillion. I can't even remember the last time it was that low. Whew. And not that I mind. Like, this doesn't bother me. It's just the market has collapsed over 50% from its all-time high. Of a market cap for the asset class of around 3 trillion, now down to 1.26 trillion. Welcome to crypto, folks. Bitcoin dominance at 43.9%. Here's the crypto fear and greed index at 13 out of 100, indicating that typical retail speculators out there, this lovable, cuddly little lemmings out there, they are not having themselves a good time. They're following one another off the cliff. Or at least some of them are still. I mean, if they're fearful, there's got to be some panic sellers out there, but wait until I show you the data indicating that there are small accounts out there that are still purchasing. They're taking advantage of this despite the fear, which is why it was frankly a bit surprising. I wanted to share it with you. First, take a look at this, though. Reason 11,023 why it doesn't make sense to be fearful when crypto prices go down. It's not because something fundamentally changed about crypto. I've been highlighting this forever. Well, take a look at this chart that on-chain analyst Plan B shared with his 1.8 million followers on Twitter. It shows correlation between Bitcoin and the S&P 500, which of course is a very popular stock index. It matches up pretty well. So what have I been saying for the longest damn time? It's provably the case in so many ways that crypto just follows stocks. That's what it's doing. Well, here it is on your screen. You can use your human eyeballs to figure this out. And so the S&P 500, of course, in this case, it's scaled to fit Bitcoin, but this does date back to the beginning of Bitcoin being traded. Look at it. The chart goes back to 2011. This, again, it's not a reason to be fearful just because crypto went down. No, nothing changed with crypto. And we just had a massive run last year anyway. This shouldn't be that surprising. I don't think it should be at all. In fact, there's so much opportunity now that prices are suppressed. Take a look at what chart analyst Credible Crypto had to say. He wrote, "Understand that this market is known for insane volatility and price swings. Things tend to go lower than we expect. This doesn't magically make their fundamentals disappear. In fact, most are stronger than they were prior to their declines. Know what you hold." And so that's certainly true. I mean, I made a video just the other day highlighting the degree to which XRP is actually being adopted for use in the real world. And I firmly believe it only takes one use case for a crypto to have long-term viability. You solve one problem for real people and or businesses, just solve one problem, it's not going to go away. Yes, if there's a come-to-Jesus moment in crypto markets and markets maturing and most cryptos go the way of the dodo, my favorite extinct avian creature, okay, fine. And I do think that's actually going to happen at some point, in which case XRP price presumably would go down a lot along with everything else. But it would still last, just like we saw with Amazon and the dot-com boom and bust. Most of those dot-coms, they don't exist anymore, do they? Amazon was at about $107. Stock price crashed down to $6 or $7. But all the while, the business metrics for Amazon were getting better, but it was just lumped in with everything else. Well, that's going to happen here. And so I'm just sitting here thinking the fundamentals for XRP, they're just growing stronger. So what the hell do I care if emotional, irrational people are doing stupid stuff? People are eventually going to figure this out. Money flows, ultimately, I believe, where real problems are being solved for real people. That's it. Credible Crypto also wrote this. With a 50+% drop on Bitcoin comes an even greater drop on altcoins. And this has nothing to do with fundamentals. The market ebbs and flows like waves in the ocean. Alts move in sync with Bitcoin. If you're bullish on Bitcoin here, you should see this as an incredible opportunity on your favorite altcoin. Yes, indeed. And then there was also this from on-chain analyst Will Clemente. This is the individual I was referencing at the beginning part of the video. And this is fascinating. So let me make this full screen for those of you that are looking at your screen. And he wrote the following. Some massive dip buying from retail, which would be entities with less than 10 Bitcoin. The second highest 7-day increase in their holdings ever. And so you see the chart here titled Supply Held by Retail. And it's the green line is the one that's particularly interesting here. Increasing retail. So the real evidence that retail speculators are actually increasing their holdings over the last week, and second highest increase over the 7-day period ever in the history of Bitcoin. It just happened. So again, that doesn't guarantee that we're at a bottom. I mean, maybe we already did, but either way, seeing something like this, a little bit unexpected. Yes, of course, retail had to come back in at some point. I guess it's a little surprise. I hadn't seen anybody talking about this, so when I saw this, I was like, huh, that is rather fascinating. Don't mind seeing that one little bit. Now, chart analyst Michael Vanderpop, very optimistic, let's say, for what's going to happen with Bitcoin and altcoins in the relative short term, let's say. So he wrote the following. I think we'll be running towards 34 to 36,000 in the coming weeks for Bitcoin. That's going to be a run of 30 to 50% on altcoins. Whew. Well, we'll see if he's right on the timing of this. To me, it's inevitable that eventually that's going to happen. I just never pretend to know exactly when it's going to be, which is why I'm very happy with my highly unsophisticated investment model, which is hold and just do nothing. My approach is just literally do nothing, because I think that the asset class is going to be way, way, way more in the future. And so I'm just going to outpatient everyone else. That's my unsophisticated strategy. And it works, because we know and data proves that traders lose money. So even if you're not a trader, but you're the type that's getting in and out of positions, the market eats you up. You think you're doing smart stuff, maybe you have a string of fortunate instances in a row, and then you're like, yeah, see, I can do this thing. But it takes one instance to get wrecked. I'm just not willing to expose myself to any potential risk. I think the best path forward, which is what I'm doing for me, is to just sit around and do nothing and just observe what's occurring. And then there was this. And this seemed a little bit more scare. It doesn't bother me, but here's what chart analyst Income Shark shared with his 312,000 followers on Twitter. He wrote, Bitcoin. I'll make the chart full screen. Bitcoin. We could see dominance rally all the way back to 60%. This is why you need to be cautious on altcoins and trade them with tight stops. There's a good chance we could see money leave altcoins and start going back to Bitcoin. Yeah, and so look, I don't pretend to know if that's going to happen or not. Obviously, Michael Vanderpop doesn't think that's going to happen. But at some point in the future, it will. I mean, we've seen it so many times for more than a decade. Money, just crazy amounts of money flowing to Bitcoin. Like I said earlier in the video, altcoins take a hit. But inevitably, that proves historically anyway, it's just proven every time that's happened, it's proven to be a great buying opportunity. And then altcoins do continue to follow Bitcoin. There's no reason to think that even if Bitcoin dominance increases and altcoin dominance decreases and they take a monetary hit on top of that, there's no reason to think that the correlation is broken forever. There's no indication of that whatsoever. People are not sufficiently parsing out the differences between individual coins. And then there's this from the Daily Huddle. Institutional investors are now dominating Bitcoin market, according to CryptoQuant CEO. So in addition to what we've seen over the last 7 days regarding retail speculators, and we'll see if that persists. There's no guarantee it will, but it's nice to see them buying too. It's really been institutional investors that have been buying the fear of the retail speculators, by and large, who have been capitulating for most of this year, frankly. The CEO of an on-chain insights platform says institutional investors are dominating Bitcoin trading. Ki Young-ju of CryptoQuant notes that 76% of the trading volume at Coinbase came from institutional investors in the first quarter of 2022. And here's a quote from the CEO. Retail investors are leaving the crypto market. Not bad for accumulating Bitcoin with institutions, but still worried about overall volume, which is significantly decreased compared to last year, end quote. So I'll just note that what he stated was true. But that's not based on the data that I just showed you from on-chain analyst Will Clemente. He's looking at different information here, and frankly, it didn't capture even the same time period. So both things are actually true. So he did make a true statement, even though he said retail investors are leaving. Yeah, okay, but the last 7 days, which is based on separate data, they have been purchasing. So just in case anybody's wondering what the hell's going on there, that's it. There's nothing weird going on. And then he says, institutional investors have likely been buying Bitcoin from market makers during the crypto price collapse last week. And here's a quote from him. Market makers, including the ones hired by Luna Foundation Guard, already sent 84,000 Bitcoin worth $2.5 billion to multiple exchanges last week. Not sure they finished selling, but it is highly likely for the accumulation from institutions since Coinbase digested the majority of selling pressure, end quote. So, tale as old as time. Retail speculators flip out, institutional entities come in, purchase their fear. Eventually, retail investors come back, and it looks like we've been seeing that over the last 7 days in particular. Is what it is, folks. But again, as long as XRP continues to be useful, none of this freaking matters. There's a reason that XRP is my largest investment, right, in the world of crypto. It's because even if crypto just tanks, because the flushing out like you saw in the dot-com boom and bust a couple decades ago, even if that happens, and it will eventually, I'm not worried. I don't know how low XRP would go. Maybe it goes below where whatever price level I average in, which I think is about 25 cents. I think that's about my average buying price for XRP. Maybe it goes below. I'm not predicting that, but I'm just saying, even if it did, I don't care, is what I'm saying. I'm going to hold. My bet is my bet is my bet, period. I'm not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.